Well, the job market in China heating up almost as fast as its economy, creating challenges for companies doing business there. Staffing agency Manpower reporting that more and more Chinese would rather work for privately owned companies based there than for foreign multinationals, making it rather hard to find and keep talent. Joining us right now to talk about all of this, Joerres. He's the CEO of Manpower, which has more than 400 recruiters operating in 20 cities in China. Jeff, great to have you here with us. Talk to us a little bit about the job market in China, because I think when we think about it, we think about all those people putting together iPods and making clothes for Walmart, but it's also a sophisticated job market.
You know, you hit it right on the head, and that's really one of the things we tried to elevate and put in place for this proposal. Because when you look at how this works, is that people have this, especially American companies and Western European countries, that everybody is kind of putting tops on bottoms, big factories. But that's not true. When you look at the management skills, the HR people, the finance people, these are top people that actually their pay grades and salaries are very similar to Western, but they're being treated kind of as this one big China population.
Well, you know, and in our lead into you, we talked about how the Chinese would rather work for privately owned companies based in China rather than for foreign multinationals. What kind of problems does that potentially create for the likes of Caterpillar, General Electric, Procter & Gamble, Coca-Cola? The list goes on and on.
Well, we did the survey 2 years ago, and what we're now talking about is a difference. So the multinationals still have the lead on being the place to work, but it's eroding and eroding very quickly. There still are more people who feel as though the multinational or the foreign-owned companies create a better environment. But it's almost, you know, half of what it was before, just in 2 years. And we know the Chinese companies are increasing benefits, increasing development, and increasing their management wherewithal. So the Caterpillars of the world, it's really a wake-up call. It says you got to be doing a lot of things right, because those Chinese national companies are on your heels right now.
Well, do you think U.S. companies are listening?
Well, I think the U.S. companies went through a very difficult time, and as a result, what they did was they made some generalizations that they have to fix very quickly. And what I mean by that is, of course, the world was going poorly, so they said no raises, for example. Well, no raises in China when they've been doubling their business, and there's many alternatives. They're going, well, it doesn't make any sense for me. So the U.S. companies have to break away from their normal mature market HR strategy, development strategy, and create a China-India only development strategy to keep up.
Now, you guys as a company, you've had incredible rapid growth under your tenure. Talk to us, though, specifically about the growth in China. We talked about 400 job recruiters working in 20 Chinese cities. That's up from what, a year or two or 2 years ago?
Oh, probably, if we go back to 3, we were in 3 cities with maybe 75 to 80. We've really expanded west because that's what the government is interested in doing, and we see lots of business there. And when you look at a labor market and you look at our opportunity in labor markets, China is it. So it is clearly the next wave of growth for us. We still have 3 to 5 to 8 years kind of in that mature market, European market, Middle East. But when we get into 3 to 4 or 5 years from now, China market is already great for us. It's going to be by far our top market.
You know, Jeff, there was a story today in the New York Times reporting today that more Chinese students are coming to the U.S. for education, replacing India as the most popular international students there. How does that dynamic, if you will, play into this?
Oh, I think it plays exactly with what you're seeing, and visiting China, as so many American business people have done, is so important. And what you'll see is there is a just incredible amount of insatiability of getting ahead. And they know, being educated at University of Chicago, Northwestern, Columbia, Harvard, Stanford, name it, or any other, they had the opportunity to go back and take big positions. That is very different than 5 years ago, or definitely 10 years ago, when the Chinese came here and stayed here. They're coming here only to get educated, and then they're going back.
Well, fast forward, Jeff, if you could. Let's say you're doing this survey 5 years from now. What do you think it's going to be like for those U.S. multinationals? Is it going to be tough for them to fill positions?
No doubt. It's going to be very similar to the U.S. So what we've got in the U.S. is the ability to say, I differentiate myself versus the company down the street. They are going to all be the same 5 years from now. Whereas the U.S. companies had been able to walk into China, talk about development programs, expat programs, rotational programs, and woo some of the best Chinese. Now what you're going to be finding is whether it's Hire or Lenovo or SAIC or any of the other companies there, they're going to be par to par with all the other ones, and you're going to have to go duke it out in the streets.
All right, got it. Hey, Jeff, thank you so much. Great to get some time with you.
Yep.
We appreciate it. Jeff Joerres, everybody, over at Manpower. He is the CEO of that company.